You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 20th of May, 2025. Thanks so much for joining us, whoever you are, wherever you are. We're always just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. So to get into that broadcast, you either have to be a member, passport holder, or on your 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com. At the top of the page, there's a big purple button. You can't miss it. Click it, fill out the form, hit submit. We'll get your indicators up and running today, and you'll get 5 consecutive trading days on the trial, starting tomorrow. The weekend doesn't count against you. In fact, the weekend gives you a couple days to kind of get familiar with the indicators, because there are markets that never sleep. So anyway, when you're on the trial, you're not just gaining access to the live training room, but you're gaining access to everything that a passport holder has. Okay, in fact, we treat you just like a full-fledged member for 5 consecutive trading days. No credit card required, so that you can make a well-informed and intelligent decision as to whether or not trading is right for you. mytradingiq.com. Click the big purple button. Fill out the form properly. Your indicators will be up and running today, but your trial won't officially start till tomorrow. Okay? All right, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, and this time scroll down the page to where it says noon broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In that email there is a link. So at 12 noon Eastern, all you have to do is click the link in the email. It'll automatically log you into our platform. Of course, there'll be days when you're out of the office, away from the desktop, but still want to join live. And some days you'll just be too busy to join live, but want to get caught up later. Well, you can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great resource to have. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, we don't expect you to watch them all, nor do you need to. But you can jump around and check out and just really see how we've evolved over the years. Again, you don't need to watch them all, but it does show you we've been around the block for a couple times. Going back to what, 2008? Yeah. Actually, CFRN launched in 2005, but the training room in its current format, that was launched in 2008. So we're not exactly a Johnny-come-lately. And you can see that for yourself by simply going to youtube.com/CFRN. Now, we're broadcasting live right now on our YouTube channel, but we're also broadcasting simulcasting on our platform, the go-to platform. So you can join either way, but make sure you know how to do it. I explain all of this every single day. And I know it gets old for those who tune in every day, but every day there's always somebody new in the audience, so just trying to do the best I can. All right, this is our schedule for each afternoon broadcast. Michael will join us top of the hour, give us a recap of what happened in the live training room. Then we'll do some live trading on the TradingView platform. But right now, let's just dive into our daily devotional. Now, we're wrapping up after the cross today. This is day 15 of 15 that we've been on this particular topic. The scripture today is Genesis 12, verses 2 through 3. I'll make you a great nation and bless you. I'll make you famous. You'll be a blessing. I'll bless those who bless you. Those who curse you, I'll curse. All the families of the earth will be blessed through you. Again, that was Genesis 12, verses 2 through 3. And I believe that was God talking to Abram, or Abraham. See, his name originally was Abram, but later renamed Abraham. So Abram probably wondered how God was going to bless all the nations on earth through him. See, there was a problem here. Abraham was childless. He was old. His wife was barren. And when I say old, I'm talking like 90 years old. But God knew exactly what he was doing. Abraham would indeed birth a nation, and from that nation would come Jesus, God's own son. When Jesus died, he made a way for people from every tribe, tongue, and nation to be saved. And then Jesus commissioned the church. And who or what is the church? Well, that's all of us that love Jesus. Taking the good news to the ends of the earth. That's what we, the church, are charged with. Acts 1, verse 8. When Jesus was on earth, he gave this report to the Jews of his day. In John 8:56, Jesus said, "Your father Abraham rejoiced at the thought of seeing my day. He saw it and was glad. Abraham rejoiced in the day that it would be clear that God had done what he said he would do. Abraham rejoiced, and likely God did too. The day our big-hearted God had been planning for a long, long time had come. And because of the great love of Jesus, more people would come into his family. In fact, all the peoples of the earth. Genesis 12:3. It's the most beautiful mission of all. A great mission God has had on his heart forever, and one that he has sweetly invited us to be a part of too. Let's make God's family bigger. That has been his good heart all along. We'll pick up on a new topic tomorrow. Let's pray. Heavenly Father, thank you for your promise to bless and guide those who follow you in faith. Just as you called Abram, lead us to walk in obedience and trust. Make us a blessing to others, that through our lives your name would be glorified in all the earth. It's in Jesus' name we believe and pray. And everybody said, amen. Well, amen and happy Tuesday. Let me give you the numbers from around the world. We'll start in the U.S. with the cash markets, or the indices as they're called. Let me pull you in the freshest of data. You deserve no less. The Dow's down 139 points. NASDAQ down 78. S&P 500 down 23. And the Russell 2000, our man in the street, positive by 1.25 points. In the commodity basket, crude oil down 43 cents. Gold up $48.80, trading 32.8190 last. That's a gain of 1.5%. Silver up 51 cents, trading 33.02 last. That's a gain of over 1.5%. In the Asian markets at the close, the Nikkei posted a gain of just 30 points. Shanghai rose just 12. But the Hang Seng did add 348 points, which is 1.5%. And in the European markets at the close, FTSE up 81. The DAX up, now for the FTSE, that's basically 1%. The DAX up 101. The CAC up 58. So we had a green day in Asia. It was a green day for the UK. And it's a mixed Radio Tuesday here in the US of A. The only one of the major indices in the green is the Russell, and it's only in the green by a point. As futures traders, we like to see all four of the major indices the same color. We don't care if they're all red or all green. As long as they're the same color, you get better follow through on your trades. So let's see if the Russell can join the rest of the pack by the time this broadcast ends. It could happen. All right, on to the news. The Supreme Court approved the Trump administration's emergency request to revoke Venezuelans' temporary protected status yesterday. The decision clears the way for the Department of Homeland Security to begin deporting nearly 350,000 people, pending individual appeals. Since 1990, the TPS program has allowed the federal government to extend legal status and work permits to people from countries experiencing war, natural disaster, and other crises. The protections are intended to end when conditions improve. The Biden administration first granted Venezuelans TPS in 2021, when over 5 million people fled President Nicolas Maduro's regime and inflation approached 3,000%. Roughly 3 million people have since continued to flee. Inflation cooled to double digits last year, but a U.S. travel advisory to Venezuela remains in effect. Yesterday's decision by the Supreme Court applies to those who received TPS in 2023 when the Biden administration extended the program and swung wide the gates. The 2021 cohort is expected to see protections expire later this year. The UK and the European Union announced a trade and security deal yesterday, marking a reset in relations nearly a decade after the UK voted to leave the 27-member bloc. Unveiled by Prime Minister Keir Starmer and European Commission President Ursula von der Leyen. The deal aims to ease trade barriers and address security concerns amid Russia's war in Ukraine and a shifting U.S. role in Europe. It marks the UK's third trade deal this month after agreements with the U.S. and India. The EU remains the UK's largest trading partner, but UK exports to the bloc have fallen 21% since Brexit. Remember, the UK used to be a part of the EU, but then they Brexited. The agreement, projected to add nearly $12 billion to the UK economy by 2040, includes reduced border checks on food and agricultural products, expanded e-gate access for British travelers at EU airports, a 12-year extension of EU fishing rights in UK waters, and UK participation in a $170 billion defense procurement initiative. Separately, President Trump announced that Russia and Ukraine will start ceasefire negotiations following a call with Russian President Vladimir Putin yesterday. They had a little chat. We'll see where that takes us. Hopefully somewhere good. Okay, from Bloomberg, oil prices eased as broader financial markets weakened, while uncertainty about whether sanctions on Iran will be loosened or tightened injected some choppiness into the session. Prices whipsawed earlier in the session after Iran's supreme leader expressed skepticism over discussions with the U.S., further denting expectations of an agreement on his country's nuclear program. The Ayatollah seems to forget that if President Trump wants to, we don't have to negotiate with them. We don't have to beg and plead with them. We don't have to kiss their ring. We can erase them. And he should really think hard about that. From Bloomberg, President Trump is set to make a new announcement on the path forward for his ambitious and controversial plan for a Golden Dome missile defense shield. Trump and Defense Secretary Pete Hegseth are set to make the announcement at 3 p.m., according to the people who asked not to be identified, discussing private deliberations. Trump's schedule for today was updated to include an announcement with Hegseth, but provided no other details, except from the people who don't want to be identified. You know what? If you don't want to be identified for what you said, maybe you shouldn't say it. People. At the Qatar Economic Forum on Monday, a combative Elon Musk took on criticism about his role in the U.S. government's controversial Department of Government Efficiency, as well as his myriad business roles, with a particular focus on Tesla. You know, Qatar should not be concerning themselves with America trying to rid ourselves of all this fraud, waste, and abuse that's been going on as part of the deep state and the bureaucracy for more years than I can count. I'm offended that they would even make a comment on it. When questioned about Tesla's weakening sales in the first quarter and April sales thus far in Europe, Musk said the business has already turned around, adding that Europe is our weakest market and that Tesla was strong everywhere else. Sales numbers are strong. We see no problem with demand, Musk added, despite falling sales numbers to the contrary. Musk said the market is the ultimate scorecard for Tesla's state of business. And right now, Tesla's up 2% on the day. So, don't believe everything you see or hear on the internet. Boy, is that a lesson hard learned. All right, Logic 247, that's our 24/7 around-the-clock E-mini alert service. Now, it's not just E-minis, it's also crude, gold, and silver. Over the last 355 weeks, we've issued over 19,600 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less being stopped out based on market structure and a simple process we teach our passport holders. Now, Valerie did the recap this morning at 6:30 a.m. Eastern, so some things have changed probably since then, but she'll update the recap this afternoon, early evening, as she does every day. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 33 alerts, and it's just Tuesday. 2 never triggered, still waiting on the outcome of 12. That gave us 19 actionable alerts, of which 2 or 11% would have been stopped out, again based on market structure and the simple process we teach all passport holders. So yesterday we had a total of 12 alerts issued, 9 actionable, 1 stop out, and we're at 11%. And now today we're up to 33 issued, 2 never triggered, 12 waiting, 2 stop outs, 11%. Now, the purpose of the logic alerts is to help you learn how to read the chart. Yeah, you can trade them, okay? But make sure you understand why you're trading it, okay? Break out that 30-minute chart. Start drawing those horizontal lines, the way I've explained over and over again. And with each alert that you dissect and actually do the work and draw the horizontal lines, pretty soon the clouds will part. And you'll be able to look at any chart of any market and instinctively know what the next high probability move will be. And based on 355 weeks of experience, we know that the market's not going to do what we think it's going to do 20% or less of the time. So don't be chasing the holy grails that promise you that you'll never get stopped out again, blah, 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 okay? Focus on learning how to read the chart. You look at a chart, you can spot instantly where potential resistance is. You can spot where potential support is. And of course, the windows of opportunity live between those 2 very important points. But again, you got to do the work. So If you want to be a trader, learn how to read the chart. Every logic alert has an entry price, an initial target, usually additional targets, and a final trade to target. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, 355 weeks is a long time, but way before we had Logic 247, we had our original alert service, the concierge trade alerts, and they're different. Number one, they don't come out around the clock. They're posted typically 5 minutes ahead of the Globex Open or shortly thereafter. I was running behind yesterday, and so I wanted to get them out at 5:55, but I put a note in the discussion group that I was running behind, so I got them out 5 minutes after the open. So what does that mean? All of our traders, all of our members, all trial members had all of these targets 5 minutes after the market opened. Here's the ES, the Dow, the Russell, crude oil, the NQ, gold, and silver. Okay. All right. So let's go look at the charts and see what's up. Okay, there's our daily chart. And let me point out, okay, 1, 2, 3, 4, 5, 6, 7 consecutive trading days, and this is the first time we're seeing a red candle. Price always reverts to the mean, and we all know that we're long overdue for a pullback to the VBC. Now, I said price always reverts to the mean. In our case, the mean is green. It's called the VBC. Stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, well, then we're bearish and expect lower prices. And when price gets back above the VBC, we're bullish and expect higher prices. Now notice, whether the pullback is from below or from above, the pullback holds more often than it doesn't. Here, and here, and here, and here. Okay? It's really important. Now this is a daily chart. I know you don't trade the daily chart, but I encourage you to spend 2 minutes with the daily chart of whatever it is you're about to trade. Get that big picture view. The deep pockets, the institutional traders, the ones who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. So by simply looking at the daily chart of whatever you're about to trade, you get a free look over the shoulder of what the deep pockets are up to. Okay. Now we're sitting right on top of support times 2. We've got blue and climbing, the black step line. The step line is attempting to cross. If we get a down close today, in other words, we have a red candle. What was yesterday's high? Come on now. 59.87 half. What's today? 59.93 half. So I guess we took it out by a tick or by a little bit. But if we close red, in other words, if we can get through this support, okay, then I believe that will be the catalyst to set in motion a retracement to the VBC. Now, all alerts, the logic alerts, the concierge trade alerts, They're all created on the 30-minute chart. Nothing magic about 30 minutes. Just a time frame I chose years ago. And they say one of the worst things you can do is hop around trying to find the quote-unquote perfect time frame. Just pick one. Get used to it. Feel free to use the 30-minute. I don't own it, but I've shown that it's got some. Well, all right, let's look at this. Here was the opening candle last night. Then we had a green candle that closed above red and sideways. So this candle opened at 59.86 and ran up to 93. That's 7 points in that one candle right there. 2 points a day gets you your goal for the day. Now, we didn't quite, looks like we missed a couple ticks hitting. What's the high of this candle again? 93.5. Yeah, we had the target at 95. So at that time, there just wasn't enough pressure to push it all the way. So we missed it by a little bit. Resistance kicked in, which will send the market looking for support. Remember, the pullback to the BBC holds more often than it doesn't. But here we actually traded through, and it looked like we were going to get a move to the downside from here. But buyers came in right here and sent us up almost to the zone. Now, these weekly trading zones that you see, they're published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. 70% of the time, when price encounters a weekly trading zone, you're going to get consolidation. 20% of the time, rejection. 10% of the time, the slice. We've published the zones now. Well, we're closing in on 15.5 years where we have published the zones for our members and trial members every Monday morning. And again, once they're published Monday morning, they're carved in stone for the entire week. Now, this is some difficult trading here. You know, it's just, look how flat we are. Yesterday, we made some movement to the downside, and we got a nice rally to the upside. And last night, it looked like it would be an eventful session, but look where we are. I mean, it's the only good, there's not even a good window of opportunity on the short side I could give you, because there's potential support here, there's potential support here, potential support here, and then you're at the zone. Price would have to get back above the BBC, but then you got potential resistance right there. So if you're trading the ES today, you probably need to wait and let it shake itself out. This is unusual. Now what this could be the beginning of a transition from the uptrend that we've been in, or from the downtrend that we've been in. The uptrend we've been in, that retracement we've been waiting on back to the BBC, this could be the heads up that that's about to become a reality. Okay? And should price start to drop today, obviously you've got potential support here at the zone, then you've got this zone, and then you've got the short target, which is the bullish cross. That's where the blue line gets above the green line. When you have a bullish cross like that, that leads to an extended move, the first time price revisits that area will almost always be good support. At least the first time down. Same is true of a bearish cross, just in the opposite direction. Okay? All right. The Dow. Let's make this look like it's bigger than it is. We have gone from zone to zone. Here's where we opened last night. We made it up to the zone, found resistance. That sent us down to the BBC where we found support. And then we bounced up into red and falling, and then it's just gibberish. And then it looks like we're going to make a run to the upside. But this little area right here, see where these two candles are split? Yeah, you should expect resistance there. The resistance is, of course, now going to send us back to support at the zone. Bounces us up to resistance, sends us back to the zone, bounces us back up to resistance at the BBC, and now we're back at the zone, consolidating. Zone to zone, back to the zone, and we overcame this zone, found resistance at this zone, and we finally made it up to this zone, 42,960. Now, there's only one more zone on the upside, and today's only Tuesday. But I don't think we're not going to hit that today. No, the market is just sleepy. I don't know, it's sleepy. Holiday trade. It's waiting on. It's almost as if Wednesday was Fed day. The market's waiting on something. I guess we'll have some economic reports at some point this week that will give the market a reason to move. Okay, this was the opening candle last night. We ran into blue and climbing, which when it gets directly above price can become resistance because it's on its way to becoming red and falling, which is bearish. And sure enough, it took us down, and then the pullback held, and then it took us down to right here. We never made it down to the bullish cross, which was the short target. Red and falling turned to blue and climbing, so we got a leg, we got a retracement, we got a leg, and that's what the Russell looks like on a very lackluster day. In Q, it's even worse. Wow. This was the open last night. We ran into red and falling overhead, resistance. If you look left, you'll probably find the reason. Okay, you got to start doing the work. Price pulls back to the BBC, consolidates, and then buyers come in right here, okay, and push it up to the zone, which we expect to be resistance. Resistance sends the market looking for support, which it found right here. Support sends us back to resistance, back to support, back to resistance, back to support, and now we're about to revisit the zone overhead that we've already tagged 1, 2, 3, 4, 5 times. So when you see a day's price movement trapped in just one zone, that's a pretty quiet day. I mean, look at yesterday. Oh, what a beautiful short trading on the way down and beautiful long trading on the way back up. What do we got today? It's kind of a nothing burger. Oh, no cows were harmed in the previous statement. Okay, here's the open last night on crude. Ran up to the weekly zone that was published yesterday morning at 6:15 a.m. Eastern. Resistance sent us to support at the zone. Then we made a run at the target, which of course was based on these highs. But there just wasn't the follow through necessary to get it all the way to the target. Okay. We did hit the short target. We spiked the zone just enough, and this bullish cross that led to an extended move, see right there where the blue line got above the green line? That's the low of that candle right there. Now, does that happen 100% of the time? No. Does it happen more often than not? Yes. Do I bring this up almost every day? Yes. Okay. So from support at the zone, that's when we made a run at the long target and missed it by 7 ticks. Okay. So then we consolidate sideways. Price gets below the BBC. It comes down to the zone, consolidates for hours, and now it's trying to get back up to the zone overhead. But you got resistance right here at 62.27. Is that the high of that candle? Come on. 62.29. That's the high of that candle. I would wait for price to get up to about 62.45 and trade it up to 62.55. 62.45 to 62.55. That looks good to me. Okay, gold. Now, when I gave you the numbers from around the world, we knew there's a big up day on gold. But when the session opened last night, we came and we dropped to our short target. Now this one candle right here, okay, opened at 32.29 and came down to 23. That's $600 per contract traded in that one candle. Consolidation, support. We're at support. Sends us to resistance. The pullback holds more often than not. That resistance. Why is my computer sluggish? I just rebooted it. So resistance sends us to support at the zone. Okay, the zone is 3207/3208. And the low is 3207.4. So that bounced us up to resistance at the BBC, which sent us down to find support at blue and climbing. Blue and climbing started the run. We hit the long target. We hit the zone resistance. See, yesterday, same spot. Resistance, resistance, resistance. And initially we got resistance here, but we got a retracement, and fresh money came in and pushed us up to the high at 32.88. $32.88.9. Now the step line, see the black step line on the way up. You had price, step line, blue and climbing. See how these are parallel? But now that we've started to consolidate up in this area, the step line is attempting to cross to the right side of blue and climbing. Once that happens, I would expect price to retrace back to the BBC. We know the pullback holds more often than not, but you never know if any given pullback is going to hold or not. Now, as we come down, if we get a lot of red and falling as we pull back, then there's a greater possibility that this time it doesn't hold. Okay, see, when we pull back here, we still had blue and climbing. Those are the ones that you can pretty much count on holding. But if this thing rolls over, turns red, blue and climbing turns red, and tracks price all the way down to the BBC, then there's a greater probability that we will trade through. Even though we know the pullback holds more often than not, we also know hang on a minute. Okay. Something didn't look right there. It'll be all right. So as the step line crosses, price starts to drop, blue and climbing will turn to red and falling, like this, and down we go to the BBC. Okay, that's what I see for gold. Silver. Here's where we opened last night. We're below the BBC. Once we get below the zone, we drop right to the target to the tick. Now, we consolidate there for a while. Support sends us to resistance at the BBC, which sends us back to support. And then the rally kicks in. This was the London Open. This is the 30-minute candle after the London Open. And we just make a beeline right up to the long target and the zone. Now let's say you had gotten in here, 32.52 to 32.76. It's about $1,200 per contract traded. Then we got a retracement back to the BBC, the pullback held. So we ripped through that zone, but it looks like, now we could continue higher here, but it looks like the step line is ready to cross blue and climbing. You only need 2 pennies to get your goal for the day in silver. 2 pennies, that's all it takes. $100 per contract. It's probably not the greatest market for beginners if you're just learning to trade. But as you become more confident in your ability, it may be something you want to take a look at. Okay. So back to the daily. Everything really hinges on us getting a red close today, a down close. Even if it was right where it is right now, I'd be okay with that. I mean, we've had a lot of consecutive, I didn't even count these. 1, 2, 3, 4, 5, 6, 7, okay. If we close below blue and climbing and the black step line, then overnight, I would look for a retracement back to the BBC. Okay. All right. Well, that covers all the markets. If you want to become a member, go to mytradingiq.com. Watch the videos, read the content, and then send an email to support@cfrn.net. In the email, say, I want to become a member. We'll send you an email that explains exactly what it means to become a passport holder. And there'll be a link that you can click to actually become a member. In that email, it's going to explain all the different benefits of being a passport holder. Number 1, you get 2 hours of live interactive trading every trading day. Now, these are live markets, live trades, real money. And with each trade, you're getting an explanation of why that was a trade. You're seeing it executed. You're seeing it managed. You're trading along in your demo account to qualify to go live. And you're asking every question that pops into your head. In the live training room, your questions are never an interruption. They're the whole purpose for having the training room. Okay? So once you become a passport holder, you're going to get 2 hours of live interactive training every trading day. Plus you'll get private one-on-one mentoring. The strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts around the clock. You'll get the concierge trade alerts the second they're published each evening. Monday mornings at 6:15 a.m. Eastern, you'll get the weekly trading zones. And once they're published, they're carved in stone for the entire week. And you'll be able to attend the members only workshop every Thursday night, 8 p.m. Eastern. And last but not least, you get the golden key that opens all the private channels in Telegram. We even have a channel for the members only workshops. There's hundreds of them in there. You'll have access to that channel. So Valerie usually puts a caption under each video as to what we talked about that particular night. So you're not going to watch them all. There's no need for that. Really, all you got to do is show up every morning and do the work and learn how to trade. But you can scroll through the previous members only workshops, and as you read the captions, you'll say, oh, boy, that's interesting. I'd like to learn more about that. And so click on that video and fast forward till you find the spot and watch it. Okay? Everything a trader needs, all under one roof, one low price. It's a good deal. I checked. All right, Michael should be here in a second, so sit tight. And then when Michael's finished giving us a recap of what happened in the live training room and doing some live trading on the TradingView platform, I'll come back and wrap things up with our good word for the day. So again, sit tight. He'll be here momentarily. Okay, guys, here he
Here,
comes.
here
Yes,
I
sir.
am. Here I am. Sorry,
It's all
I
right.
was fixing the website.
Okay.
Okay, I think I'm ready to go. Hold on. Let me
Okay,
get back
just
here first.
grab the charts.
Okay. Slide that down. Slide that down. Turn this back on. That was not that. Okay. And like that. All right. Now I'll grab the charts.
Okay.
Coming over here. All right.
All right, looks good.
All right. Excellent. We'll get right into it then. Spread that out a little bit. Shut that one off. And hopefully we'll have all our drawing things that we did this morning on here. This is 100 range. We can go back to the 47. And getting there. Good. Perfect. All right, here we go. Let me refresh this page because I just changed. I've been saying for 2 weeks I got to fix the economic calendar, and I just did. Good afternoon, everyone. Today is Tuesday, the 20th day of May, 2025. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. All right, just click on that purple button and you will be sent everything that you need. Well, you sent to this page here. When you fill out this page, when you fill out this form, all we ask for is your first name, your last name, your email, your phone number. Fill out the multiple choice questions, and down here at the bottom, click on this. It gives you TradingView login ID. Okay. Once you do that, then we'll be able to get your indicators indicating on your charts for you. Now, if you don't have a TradingView login ID, click on this button right here to go get one. Okay. If you do have one, just put it in right here, and we'll set you up as soon as we can with your TradingView login ID and your indicators on your charts. All right. Spreadsheet. Today we had a pretty good day today. We're down in a couple of markets just a little bit, but it was okay overall. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 20th day of May, 2025, as I said earlier. We were up 127.6 on the NQ, minus 32 on the Russell, plus 81 on gold, and minus 2 on the ES. That put us at $1,260 on the day. Today it took 4 minutes and one trade to get to the goal for the day. At that point, we're up $170 with one contract, or $1,700 with 10 contracts on, which a total of 19 trades this morning. So right now in the month, we're at $14,167 over 13 business days, averaging $1,089 per contract per 2-hour business day. On the year now, we're at $133,985. That is with one contract. We're 85 business days, averaging $1,576 per contract per 2-hour business day. Now, if you were to do the 24/20 blueprint, which is to get you to 20 contracts over 24 months, I'm beginning to think we might want to change that to the 10/12 blueprint. All right, 12/10 blueprint. Just 10 contracts over 12 months. But either way, if you were to do the 24/20 blueprint, then you would be adding one contract a month. Now, the way the blueprint works is you add one contract for every $2,000 in profit that you make. So if you set your daily goal at $100 per contract, which is what mine is, you have roughly 20 business days in every month. So if you only make the minimum of $100 per day per contract when you get the goal for the day, and you can see most of the days I have more than that when I actually close out the trade where I got the goal for the day. You know, every one that's over $1,000 is something better than the minimum goal for the day when I closed out the trade. If you did that, then you'd be able to add one contract a month. And that's what this says over here. If you just simply add one contract a month, it's not adding when you actually get to the $2,000, it's adding just one contract a month. You know, if I added when I got to the $2,000, like this month, for instance, when we get to $10,000, I would be able to add another contract. Last month, when we got to $8,000, I would have been able to add another contract. And the month before that, when we went to 6,000, I would have been able to add another contract. So I would have been adding much sooner. It grows actually faster than that. It's not just one per month. But just to keep it simple, we'll go with one per month. If you were to do that, so far this year, you would have only had to work 10.8 hours, quitting trading when you get the goal for the day. Like this morning, I would have quit after 4 minutes. Yesterday, 7 minutes. The day before that, 5 minutes. The day before that, 4 minutes. Quitting trading when you get the goal for the day. And I really do, your goal doesn't have to be $100, but I really do recommend quitting when you get to whatever your goal is. Okay. Now, $100 is something that we set 15 years ago, practically. And back then, it was an achievement to get 2 points a day on the ES. The daily range on the ES was only about 6 to 10 points. It was an achievement to get 2 points a day on the ES, and that's what the goal was. Now it's wild, and $100 seems like it's really easy to get, and it is really easy to get. But you should have a goal that you can achieve every single day. Okay. You don't want to set your goal out of reach, because then you'd be doing things that you shouldn't do. You're more likely to break rules to try to get the goal. Get a goal that you can achieve every single day and be satisfied with that goal. Eventually you can add that. You can add contracts, and that's what this is all about. Add contracts, keeping the same goal. Right? To make more money, you just add another contract. All right. That's all that stuff. Sorry, I got a little sidetracked in there. Want to just look at this and see what it actually looks like on the website, since I just changed it. The economic calendar. Okay, see, it looks a little different. This is May 20th. That's today, right? Yeah, so this is the May 20th stuff right here. May 20th. Okay, so these are all the things that we had. This is Canada and the US. So I only have Canada, US, and the Euro in here. This is at 4:30 this afternoon. Tomorrow morning, US, we have this stuff at 7 o'clock. Canada at 8:30. Then we have crude inventories at 10:30. That's what we have tomorrow. Auctions tomorrow afternoon. Then Thursday morning, May 22nd, Thursday morning, we have, that's interesting, I never really noticed, beef and corn and all these other things in here. Those are all low impact. See this little thing here says low and high impact. The initial jobless claim Thursday morning is high impact. Canada has some medium impact stuff, and then all the soybean stuff, pork, wheat, all that. 9:45 we have a high impact at 9:45. S&P Global Comp. 10 o'clock we have another high impact, existing home sales. That's it. This is a new calendar. It's the first time I really looked at it on the webpage since I just put it on a few minutes ago. But you can get there by going to mytradingiq.com, click on economic calendar, and it only has the Euro, Canada, and the US on it. Okay. The one that I had before this had everything, and it's just a bunch of stuff that you have to sort through. I'll clean this up so it looks a little better, probably, at some point, unless it took me a month to get there. Anyway, this is all set, and now we can get in there and trade. Or actually, I can show you the trades that we took. All right, we'll start out with gold. Gold is where we made the majority of our money today. Let's go all the way back to the beginning. Okay, and somebody had asked me that a couple weeks ago, what market I would rather trade. And gold has been one of the big gainers lately. See, gold this month right now is the big gainer. It's at 6,100, where the others, the two contenders, are at half that. So it's a good thing. Anyway, in gold, our first trade of the day here on gold is where we got the gold for the day. We got 17 ticks on that first trade. And the next trade, we picked up another 10 to get us to 27. And we didn't do anything for a little while. Two new mice coming in. This one's been giving me ass this week. Okay, and we went from 27 up to 52 right here, so that is whatever that is. After that, we had an aggressive trade there for 4 ticks, get us up to 56. Then an aggressive trade there that was a break even. Then a conservative trade here that goes from 66 up to 76, and then a conservative trade here that got us from 76 to 81. and then wow, I did not write all the trades in. I don't know what these last two trades were because I didn't write them in. So I had stopped at 81. Let me go see what those last two trades were on gold. I'll add that to it. I can find it here. Here it is. Uh-oh, there's an error. Okay, well, I won't add them in. Anyway, the last two trades that I had here on gold were both winning trades. I believe that was a big trade right there. But I didn't write it down, whatever it was. And that was it. Now, during the break here, it looks like when you're below the YBR, you're drawing this way. You would have been drawing from back here. So this would have been a pretty good place right here to take a conservative trade right there on the down close of that bar right in there. Conservative trade for the move down. Didn't make it back into the overbought until here. Came out of the overbought right there. You'd have been working with this, in that case, that leg length right there. So that would have been a trade I would have taken right there. I would have gotten a break even. Flip directions. Now this right here, we haven't gone over this at all. For any of you guys that are in the room in the morning, I know it's only Tuesday, but there are a couple of things that I meant to go over that I haven't gone over. I'll just go over it right now. You know, there's 3 different kinds of chop. Okay. There's bugle chop, there's triangle chop, and there's channel chop. Now, this turned out to be bugle chop right here. It started out as triangle chop, right? Triangle chop. But then it put in a higher swing right here, and then it put in a lower swing right there, and it turned into bugle chop. Now, that usually happens at a trend change point. Okay, so if I go, let me do that. I meant to do this. Click that and get rid of it. That usually happens at a trend change point. So if this is all you know at that point, right, where you got a higher swing right there, and then you got a lower swing right after it, at that point, let's remove this and this. At that point, I would be looking for it to get back to the midpoint right here and to find support, or I'm sorry, resistance at the midpoint of this leg right here, right? So for those of you guys who are on the trial right now, we're in around the trial, or any of you guys that have been gone for a while and come back, because I see both of those types of people in here. When this happens, you should anticipate price to pull back up to here. Now, when you're in this normal situation, right, when you're in a normal uptrend, which is what this turned out to be when you had a higher high like that, when you have your higher high, you're expecting it to pull back to 50% and then to return to the prior swing high right there, right? That's what you're expecting. You're expecting that. But if you get the bugle where you get that move up there and then this move all the way down here below the prior swing low, right? Below here. That changes things. And now you have this leg length. And what you're looking at now, instead of looking at the swing high for your target, you're looking at the midpoint of that leg length for your target. Okay. Or it's not really necessarily going to be a target. It might be a target. You might get a trade. If it doesn't flip the YBR, you might get a trade to be able to take that. If it didn't flip the YBR right here, you might have been able to take a trade back up to that point. That would have been your target. If it works out that it flips the YBR like it did right here, then that's where you're going to be looking to take your trade off of. When it pulls back up here, this is going to be the place you're going to try to enter, right in here. Okay, so when you do your retracement look, your retracement lines, when you draw those on, this is the place you're going to be trying to enter right up here with an expectation that it'll get down to here, and then eventually it'll be twice that and get down to like here. Okay, so if we go through this bar by bar right now, I'm going a little off script here because I'm still on the first one. I haven't done all the trades yet, but no, it's totally unscripted. I guess that's, so I'm not going off script. I'm just winging it. But so what you would expect here, if you go bar by bar right now, is you would expect it to pull back up to this blue line that I've drawn in here, right? And find resistance. Now this flip the YBR, you'd expect to get up there, find resistance, and then give you a trade off of that. Okay, so I was winging the blue line. It would actually draw it. It would be like this. So it'd be just a hair lower, right? A hair lower. And right there, when it gets up there, right here, when it gets up there, this would be a pretty good place to enter a trade. Now, I wouldn't say that that would be a great place to enter a trade. I would say when you get the down close and it pulls out of there and you have your conservative look, wait for a little bit of a pullback so your stop is on the other side of the midpoint. Okay, that's what I would say would be the best entry for that trade. I mean, you could go with the conservative right there, but your stop's going to be pretty close to the midpoint. I would want to wait for a little bit of a pullback. It really didn't give any, so I probably would have missed that. If I waited like that, I probably would have missed it because it only gave a couple of ticks pullback right there. But that's what you would expect, right? And so now you expect this leg to happen again, right? That's what you expect, this leg to happen again. And you expect this move down. Let me draw it for you. Using the diamond principle, you expect that length down to happen in, well, I don't know how much time yet, but I'm going to guess it's going to be probably this amount of time. I'm guessing that right now, okay? But that would be based upon it going below this level in that amount of time, right? So this is the move down that should happen from here. That's your price element. And okay, that timeline that I drew is not accurate. It came back up and it found that level again, and it's still looking for that timeline to happen. It still hasn't happened. Okay, so it didn't end up doing that part. It didn't end up going down. It reversed right in here. But that's what you would expect. You'd expect this to act as resistance, right? When it comes back up, you expect that to act as resistance. So you could have shorted it right in here, gotten one break-even trade out of it. And you could have shorted it again right here off the midpoint. You could have done an aggressive short on that. Either way, it would have worked out to either a break-even or profit, no matter which way you did it. And then when it came back up over here, it went right through the midpoint. And in here now, you have to ask yourself a question here. Has it pulled back too far? Is it showing too much weakness because it hasn't put in a lower swing yet? Well, you had 3 of these. It hasn't put in a lower swing yet. And then it flipped to YBR right there. So you wouldn't be looking in that direction anymore anyway. But do you see how that, when you have the bugle thing like this right here, you have the bugle chop. Where did I draw that one at? This right here. When you have the bugle chop, how that midpoint right in here becomes important. Okay, I knew I drew all over it, but this right here was a bugle chop where you had the higher high and a lower low. Then the midpoint is what you expect price to come back to. Okay, sorry, I knew I got way off track on that. All right, so let's just go to the next market. We'll go to the end here. We'll go to the next market. You see, here was another one right here. Here's your bugle chop again, right there, higher high and lower low. And what would you expect? You'd expect that midpoint right here become important. You see it? It almost always does. All right, sorry, a little lesson on that. I didn't mean to do that. On the Russell now, we only had a couple of trades here on the Russell today. We had this one right here at the very beginning. That was a mistake. I should have had my stop at break even, and I ended up with -7 ticks. And we had this one right here that just stopped me out. And again, I think that was a mistake. I should have had my stop at break even on that one, and I had -25 ticks. So I had 2 mistakes on the Russell, and both of them cost me money. That was -32 on the Russell today. There really wasn't anything happening there during the break. Okay, wait, let me go back and look at that. Something just about jumped out at me. Yeah, not quite. It's almost got the bugle thing going right here, but not quite because the low is not lower low. Okay, but what I'm figuring right here is that this right here is going to become an important area for the Russell, right there. Okay. Yes, that was funny that I say the word area because we used to joke about people who said this is an area, and that's true. It is an area. But then you can get, with the range bars, you can get much more specific and say this is an area, but this is the exact price we want to be entering. But you know ahead of time where it should go to, an area where you should be taking action, where you're going to have the most likely good scenario from the actions that you take. All right, That's not what I meant to do. Just trying to drag my chart over. Okay, so this is the ES. Now our first trade on the ES was right here. We picked up 8 ticks on the first trade. And then I made a mistake on this one and I stopped out -10. We had one more break-even trade on the ES over here, and that was it. We hardly traded the ES at all today. It's not to say that there weren't any trades. It's just it seemed like we were trading gold more than anything else. You guys see the bugle on this? Do you see any of them? Do you see 2 of them? Do you see 3 of them? Do you? If you go bar by bar like this, now you have a higher high, and if you're looking for your pullback opportunity here, and then bang, it goes way down like that. So you have a higher high and a lower low. This becomes an important area. Okay. And we drew this on it right here. That's the important area as it goes forward. That's something, I mean, even if you don't end up staying with us, that is something that you'll benefit from. You understand that little bit right there. Forever. All right, on the NQ. So we ended up with -2 on the ES, and on the NQ, we ended up with 127. It's mostly because of a couple of big trades. The first trade right here, we got 75 ticks on. Then the next trade right here, we got 12, put us at 87. Then we got 20, put us 107. We had a break even, and we got 20 more there to put us at 127, and we had another break even. And this break even I had screwed up. I made a mistake on that one. So it was kind of an odd color. During the break, don't really see anything here during the break. Just a couple more bugle scenarios like this one right here. Okay, we had a lower low, right? And you had a higher high. The midpoint right here is what you end up going for. You guys see that? How that becomes an important area? Bang, right there. Becomes an important area. And it's bouncing off it again and again and again as you go forward. Anyway, that was the Russell. I'm not the Russell, but the NQ today. We ended up with plus 127 on the NQ in just a few trades. All right, well, I talked a lot right there. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on that purple button. It will bring you to this page. Just fill it out right down at the bottom. Gives you TradingView login ID. Hit register, and you will be sent everything you need to get your indicators indicating on your charts and to get into the room in the morning. Now, for people who sign up like in the middle of the week and their trial carries over to the next week, typically you're supposed to get an email on the following Monday. I know this has happened to some people this week. You're supposed to get an email on the following Monday telling you what the new password and ID is. But once you do actually sign up, all the stuff is put in Telegram. Okay, it's in a Telegram channel that you'll have access to here. Okay, this is where the ID and password is every Monday morning. It's put in this Telegram channel. When you do sign up, you'll come out here. You won't be getting an email anymore. All right, it's going to be in this Telegram channel. You have to go to this Telegram channel, and you'll find it right in here. All the information you need to get into the room. Okay, that's every week. Goes out at 6:15 a.m. every Monday morning. Okay, so let's get in there again. See if we can make any money. Now, I'm looking here at this right here. This is 100% retracement leg of that last leg length on the ES. I got everything all covered up here. Yes, this is 100% retracement of this leg length right here. You have to go from where it came out of the oversold to where it went back into the oversold. Okay, the high and low in that area, in that spot right there. So it went there. So right here, this up close right here could have actually been, it's got to come out of the oversold. When it comes out of the oversold, if we get an up close on this bar, that would be a trade that you could take. Now, it seems like the market's really lost everything all its momentum and everything right here. So yeah, it's not trading up anyway. The NQ, this is what it looks like. Okay. So this right here, if it bounced off of this, if you got a wick down to here, ended up close on the same Q bar, that would be a pretty good trade to take right there, I would think. Okay. I already drew that in there on the Russell. The Russell's just not moving much. I don't think we're gonna get any trades here on the Russell. But if I get rid of this on the gold and we go with what we have right here, get rid of that too. So you're above the YBR, so you're drawing from the YBR back, from near the YBR back. So this is what we want to see it pull back to in here. Okay, those are the trades that we have. You get one-on-one training, you get whatever you want, Sai. So yeah, there's, okay, so there's the up close on the yes. But I mean, I do training with people every single day. You know, after I'm done with all this, you know, as soon as I'm done with all this in 6 minutes, I have a half an hour break and then the meetings start for me. Okay, the one-on-one training stuff. So here's the ES bouncing off the 100% retracement right here. Okay, it's not a great trade. It's not really pretty because the midpoint is right there. So you got resistance right up above you. So it's not a really pretty trade to take right here. It's almost forcing it to take this trade, you know, because it's not the easy and obvious trade. This one over here, right here on the gold, is a better trade to take. It's not really the momentum trade you want to take right here. Not the momentum, the aggressive trade you want to take right here. I mean, you could have taken an aggressive trade right here because you're so close to the midpoint that the stop would be down here. So you could have taken the aggressive trade right there, but if you wait for the up close right here, that'd still be a pretty good trade. If you do get the up close, you're gonna want to wait for it to pull back a little bit, just a hair. Okay. The ES trade, as I said, it's forcing it a little bit. It's just gotten to 4 ticks in profit. I'm gonna lock in 1 because I really don't think it's got any leg in it. You know, getting up to the midpoint was a stretch on that. And this one right here, you can't take the aggressive trade now because it's already gone 5 ticks into profit. But it's hit the midpoint, so now an up close on this would be a nice trade. I would think an up close on this one would still be a good trade. Right now on the gold. Right, so I'll bring my gold down over and we'll just do this right here. Make sure window is always on top. And so we've got a low on this one right here of 85. So we'll be buying 86. Okay. Just like that. If we get an up close here at 86, that should be a pretty good trade. All right, now this is dropped down to 84.6 and I'd be buying 85.6. Any lower, if this closes down, I'm not gonna be that interested in this trade. And it closed down. It's not as interesting of a trade to me anymore. It's lost some of its steam going up. I feel like I'm winging it here doing it right now. I'm actually not going to do it. It's a lot of money. So this kind of lost its momentum right here. If it would have stopped right here and given us an up close off the midpoint without going down below, but now that midpoint is going to act as resistance. Right? None of these marks are really looking bullish right now. Terribly bullish. The S did make it through the midpoint though, so that's a little something. But yeah. And there is the up close on this. Now, did I not draw this out? Here, let me draw it out. Why did I draw that for you? This is what it should have been. Okay. So on this up close, right here on this up close, a pullback into here is where I would have wanted to enter. If I were paying attention, I would have wanted to enter on a pullback into this bar that would put the stop down below that midpoint. Okay, and if I did do that, we'd be locking in profit right now, but I didn't. Okay. Yeah, but Si, you're right. The stuff that we have out here on the website, oh, it's not there. The stuff that we have, that's where I got the economic calendar. The stuff we have out here on the website under videos, it's a little bit outdated, I think. Maybe. Yeah, it's a little bit outdated. It still has a ribbon on it and stuff. You need to put some new stuff out there. I'll create a couple of videos during the session, during tomorrow's session, maybe. Stick them out there. This is something that a lot of people are actually using. They're using the ribbon instead of the YBR. It's a lot more reactive than the YBR is. But you gotta be ready to trade if you can do that. A lot more trades. Wow, it's 129 already. Man, where did the time go? Okay, so this did 100% retracement here on the gold. That would have been a good place to take a trade from right there. I just noticed it. Off the 100% retracement right here, that would have been a good place to take a trade. It should make it up to here, and this should act as resistance now. And if this were the case, if this is going into the overbought, or at the same exact time that it hit the 50% level here, I would short that. Okay, that's not what happened, but if that were what happened, I would short that. All right, so I know this is not a valid trade, but if you get a down close on this bar right here, it should go down through this level right here and flip the YBR. That's what it should do from right here. All right, so back here for a second. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Click on that purple button. It is going to bring you to the registration page. Just fill it out. All right, once you fill out the registration page, you will be sent an email with all the information you need to get into the room in the morning, and we will be able to activate your indicators for you. Okay. All right. Well, that is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready. And Dwayne is ready. It's on its way over. All the way across the country. There it is.
Okay, I'm here finally. Recap of the morning session.
Today it took 4 minutes and one trade to get to $1,700.
Great job.
Thank you. Thank you very much.
Okay, guys, we covered all the markets. We covered how to become a passport holder. So now we're going to wrap it up with our good word for the day, which is learning to say no. Some of us have a problem with that. John 17:4. I brought glory to you here on earth by completing the work you gave me to do. To say yes to the will of God, you will have to say no to other things. And some people won't like it, especially if they are used to getting their own way. People will make demands on you based on their needs and be oblivious to or uncaring about your needs. So you have a choice. Be led by God or by others. No one was busier than Jesus or had a greater assignment. Yet we read in Mark 1:37, when they found him, they said to him, "Everyone's looking for you." But he said to them, "Let us go into the next towns, that I may preach there also, because for this purpose I have come forth." After having completed work in that town, Jesus chose to remain focused on his mission to continue on preaching in the synagogues throughout all of Galilee. That way, he was able to say his heavenly Father at the end of his life, "I brought glory to you here on earth by completing your work you gave me to do." If you have a hard time saying no, stop and mentally picture what you think will happen when you say no. The only way to conquer your fear or insecurity in this area is to begin to take small risks until you are finally comfortable giving a firm no. When a person gets into debt through reckless spending, you're not doing them a favor by saying yes to bailing them out. You're enabling them by saying yes to someone who refuses to learn a new skill set they're capable of. You're promoting learned helplessness. So we don't want to be mean, but we truly want to help people. So sometimes you just got to learn to say no. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.